Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from OverActive Media Corp. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with OverActive Media, please click on the Meetings tab found on the left navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Chris Overholt, President and CEO of OverActive Media Corp, which trades on the OTCQB venture market under the symbol OAMCF and on the TSXV under the symbol OAM. Welcome, Chris.
Thanks, Matt. Good afternoon, everyone. I'll take a couple of minutes today to talk to you a little bit about the journey that we've been on at OverActive Media since the fall of 2018. It's been incredible for us and a great growth story in and of itself, and an amazing industry that's really taking shape in all the ways that we imagined. I'll spend a little bit of time talking about OverActive's position in the market and in the broad industry. I'll talk to you a little bit about our business thesis, and then, of course, we'll wrap up with some questions at the end. So as I mentioned, we started the company in the fall of 2018, and maybe before we get started, a little bit of background on myself. My background is 25 years in professional sport and Olympic sport around the world. I started my career with the Raptors in 1996. I eventually became one of the leading members of the executive team leading the business at Maple Leaf Sports and Entertainment before I went down to Florida to work for both the Florida Panthers and over 7 years at the Miami Dolphins as well. I returned to Canada in the spring of 2010 to serve as the CEO and leader of the Canadian Olympic team, and did that proudly for most of 7 years. So why is, or 8 years rather, so why is that at all relevant? Well, because it's our business thesis that esports, competitive esports, and more particularly these franchise leagues that have taken shape in the recent years, are sport for a new generation of fans, and that these leagues are going to take shape and deliver a business model that looks very significantly similar to the NBA, the NFL, insofar as they share revenues and growth opportunities in media and sponsorships and licensing with the franchise partners, and then give those same owner groups in local markets like Toronto and elsewhere an opportunity to build out a business that looks and sells and sounds just like traditional sport in the ways that many of us have understood it for years. So the way we describe our business is as a 21st century sports media and entertainment company, but for today's generation of fans, a generation that thinks, frankly, differently about their sports media and entertainment choices, differently about how they and what they consider to be sport, and again are focused on leagues like Call of Duty, Overwatch, and League of Legends, rather than on NFL or NBA football. Not to bury the lead here and to give everybody on the call that would be interested a sense of our financial standing, we've grown considerably on the revenue side over just 4 years. Again, our 2021 full year headlines you can see there. And we have a strong cash position right now. I think that's candidly somewhat unique in this industry today. We did take the company public, as was mentioned, in the summer of 2021, and in the process raised $40 million. And so in that context are well capitalized for the predictable future. Coming out of Q2, again, our growth continued to be strong, and again, we're hitting the marks in the context of our revenue growth and business growth broadly, reducing our cash burn as we go along in all of this, and driving good money to operations. And so I'll spend just a few minutes talking to you about our unique position in the market. I said already earlier that we've taken investments in these franchise leagues that exist around the world today. European League of Legends, or the LEC Championship, is one of our core investments around League of Legends. Toronto Ultra is our Call of Duty team that plays here out of Toronto, and Toronto Defiant, again, here out of our facility, Liberty Village, Toronto, playing in the Overwatch League. We have the distinction as a company of being the only company in the world that has franchises in each of the 3 franchise leagues that are available today. And so in that context, have a unique story to tell with the marketplace. You can't build great companies without great people, and the advantage I have of being a little bit older is that I have great experience over years with some of these great folks and leaders in their own space, many of whom were with me at the Olympic Committee or in other roles, all of whom have been involved in sports, marketing, and big brand sponsorship deals, in some cases clients of mine. But this is a very formidable team with depth of experience in those areas that I mentioned that is highly relevant to the business we're building today and the industry that we're in. And so the way we think about our business and the story that we tell to sponsors is in the context of that authentic connection that we provide to today's generation of fans, the Gen Zs and soon the Gen Alphas that represent a combined $150 billion in global buying power by 2030. We provide chief marketing officers around the world an authentic connection that makes sense to this generation that is otherwise quite fickle in its own right and very difficult to reach. And so in that business model, we're able to attract significant sponsors, which I'll highlight for you in a moment. We think of ourselves in this context, and it's often a helpful analogy, at least to draw for investors as they look in on our business. But if you're a sports fan at all, you would certainly understand the power and the strength of Madison Square Garden built over time. If you live here in Canada, you would know that Maple Leaf Sports and Entertainment is the preeminent company in the industry in that regard here based in Toronto. OverActive Media is building the Madison Square Garden or the Maple Leaf Sports and Entertainment, again, but for today's generation of fans. We play in the biggest and most important franchise leagues in the world. We produce content and brand marketing position and sponsorship opportunity, just like those teams, the Knicks, the Rangers, the Leafs, or the Raptors. And soon, as I'll highlight for you in just a second, we will be in the venue business that will allow us to compete every day for the top music and entertainment acts that land to the market, and all at once provide a convenient home for our two teams in our leagues here in Toronto. This is a venue opportunity that we've been working on for now 2 years, and we expect to be able to put a shovel in the ground in Q3 of next year. Strangely, to me at least, Toronto is now the 4th largest market in North America, the 5th global market, Live Nation tells us, for music and entertainment, and yet still has only one real arena or venue for the leading acts to play in here in Toronto, that of course being the Scotiabank Arena. And that arena is conflicted out with the Leafs and the Raptors 100 nights a year. So as we started the company in the fall of 2018, we realized that there would be a market opportunity against our strategic pillar that is entertainment, an opportunity to have a home for our two teams, but equally a chance to drive leveraged partnerships into that business, use those to support and grow our team sponsorship business, derive a first-party data strategy out of this venue that would allow us deep understanding of the fans and that today's generation to enhance our storytelling to the marketplace broadly. So again, this is a 7,000-seat performance venue first. This is not an esports venue. This is a venue that will allow us to compete for, again, the premium music and entertainment acts that land at the market. We expect it to be highly enabled with technology, and certainly give us, again, a running start at building a home for this generation of fans. And so we've carved out in just a few short years our leadership position. We own the premium real estate in the industry, so to speak, around competitive esports in these franchise team holdings. We are building and have been building contending teams each year. We've qualified in Europe for the World Championships with our Mad Lions team each of the 4 years we've been in business. We've been contenders in Call of Duty and Overwatch each of the years that we've operated, qualifying for the playoffs in most every year. And we built and established a global reach and audience of more than 130 million combined through our players and our influencers and owner group that are attached. And we've been able, as a result, to attract some pretty meaningful partners to the business. The Weeknd, Grammy Award-winning artist from Canada, the Montreal Canadiens, Bell is the biggest integrated media and marketing company in the country of Canada. They are all significant investors in OverActive Media. And for reasons that I'm hoping are starting to become obvious, we're attracting the attention of a lot of significant brands, both endemic to the space, but maybe importantly and increasingly non-endemic. TD, Bell in Spain, Imagine Bank, and Seat. These are non-endemic brands that are new to the industry, new to the esports and gaming space, and are trusting us with their positioning and their storytelling to this generation. We are on a track to deliver record-setting results this year in our sponsorship business. Again, built from nothing 2 years ago. Our team's done an amazing job there, and we continue to have great announcements and a collection of new spaces and new verticals. I mentioned, this is an industry that tends to attract high impact and very influential celebrity and investors. Again, OverActive Media, no different in that context. Mitch Marner, not noted here, Sidney Crosby, Phil Kessel, Carl Hagelin, all stars of the NHL. I mentioned Grammy Award-winning artist The Weeknd, Bell of Montreal Canadiens. Again, these are important and authentic connections to our business, and each one of them having written a check to be involved with us, again, connects them authentically to our brand story. So as to the business model, very quickly, just think of this as sports for, again, a new generation, and the revenue streams that live within it are similar to any NBA or NFL team, starting with, again, the franchise position and the relationships that we enjoy with our publisher partners, Riot and Activision Blizzard. We're invested in these franchise leagues in large part because they share revenues with us. When they do marketing partnerships, sponsorships, media rights, licensing as franchise partners in these leagues, we enjoy a share position in all of that. So that is high gross margin revenue in every regard. Doesn't cost us $1 more to accept that check. We are focused, as you would expect, on marketing partnerships and sponsorships to grow our business and our reach to audience and our connection to those brands. And we do that well in the ways that I've described. And again, these tend to be very high gross margin businesses. And then on the events side and content and licensing, again, just like any other sports team, we're in the live event business. We hosted 2 live events here in Toronto this year, one around our Call of Duty team, the other around our Overwatch team, attracting thousands of fans over 3 or 4 days to each and delivering an authentic, connected live experience to that audience. So again, business is not any different in those ways than sports business as we all understand it today. I mentioned again our strong cash position, fueled by the fact that we've raised $108 million over just 4 years. Our revenues have been steadily growing over that same time, and again, bit by bit, we're emerging toward a path to profitability. We think in the next several years. We also expected, but frankly have been surprised by the level of consolidation that's been going on in the industry, certainly led by the announcement last year that Microsoft would be acquiring Activision Blizzard. We've seen other mergers that are noted here, acquisitions along the way that are really starting to show the strength and power of the industry broadly. On a combined basis, the gaming and esports business globally is bigger than the movie and entertainment business in and of itself. And so again, that reach to audience in a different and differentiated way really matters. And again, we're proud to be partnered with some of the leaders in this space and some of those that are leading, frankly, the consolidation story around all of it. We've seen steady growth both in terms of the revenues, but also in various elements of the revenue streams. Again, on the left, you'll see the growth as projected by, I believe, Newzoo, noted on the bottom of the slide. For the industry leading into 2024, and just incredible double-digit CAGR growth that's been taking place in the time since we've been in the industry. You're equally seeing growth in, first, of course, led by sponsorship, but also in media rights. We actually expect media rights to grow to be at some level soon co-equal with the sponsorship business attached to these franchise leagues. And of course, we've all been watching the emergence of Web3, NFTs, and the metaverse. However you want to describe it, we certainly expect those digital revenues and digital items and the revenues that stream from them to be a major part of our future going forward as well. I like to keep this slide in the presentation because it highlights the very heart of our business thesis. This slide's actually from our original investor presentation back in 2017. And it was at that time that we realized the incredible growth of the esports audience around the world, having already eclipsed Major League Baseball and National Hockey League and bumping right up against some of the biggest sports leagues in the NFL and the NBA. But what we also noticed is that the average revenue per fan was not yet realized. And so as compared to those sports leagues that we all understood and have watched grow so successfully over 30, 40, 50 years, we saw an arbitrage opportunity and the chance to realize that revenue against that fan base emerging. And so, again, as you look at our new audience versus the traditional audience, you can imagine the story that we get to tell when we're out talking to those non-endemic brands that are trying to reach this audience. We're younger, we have global reach, we're native digital, and all of those things make sense to the partners that we speak to every day. And as you can see, in 2019, the Overwatch League, as only one example, was growing in that much coveted 18 to 34 demographic at a much higher clip than any other league noted and available in North America today. So again, we believe we got our arms around something quite significant here. I like to use this case study as a frame of reference. It speaks to me because I was in the NBA at the time. Its most formidable growth years under David Stern's leadership. But in those years, there were a number of team transactions that took place. I think on the low end, the Houston Rockets were sold to Les Alexander and his group for something in the neighborhood of 85 million US. On the high side, I think the Portland Trailblazers and the Boston Celtics both traded hands at something north of 100 million. But since then, of course, we've watched the incredible growth of the value of these franchises in the NBA to be nothing short of 2 billion US across the board. We believe that these franchise leagues that we're invested in will hold similar value on an enterprise growth basis as they throw off discounted cash flows in the model that I've described, and because they are scarce in the context of the leagues and those that own them. And so we feel pretty great about the idea that we've got our arms not around one of these franchise asset holdings, but three at present. And we've seen evidence of the growth of these assets on a secondary basis in the market. Most recently, we've seen trading of the European asset under OverActive Media. We play under Mad Lions. We've seen team transactions over the last couple of years approaching $50 million Canadian. We paid substantially less than that for that franchise opportunity holding. And so, again, in that context, our thesis is now becoming a reality. And by the way, we're not the only ones that saw this potential. We are partnered in these franchise leagues, not only with the biggest publishers in the world, but right alongside some of the biggest and most successful sports owner groups in the world, whether it be the Cronkies or the Wilpons, the Crafts in Boston or the Wilfs in Minnesota. These very significant sports owners are not only invested in esports and gaming broadly, they're invested in the very same franchise leagues that we are. And so if you believe, as we do, that successful people leave clues, we find ourselves, we think, in good company with an optimistic future. I mentioned the steady growth of the organization and its revenues over time, but correspondingly, you can see the way we're impacting the margin contribution of the business as well. That's, again, the results of the growth of the business in the ways that I've been describing, but also our very responsible approach to managing our costs. We are not aggressive spenders on player contracts. I would characterize our approach to that as more development oriented. We've been as successful building successful and playoff contending teams as we have been developing and selling players in the secondary market. But our approach here is, again, more responsibly a more of a Moneyball approach, if that makes sense to baseball fans that might be on the call. And I started earlier with the strength of our people on our management and operations team and their depth of knowledge and expertise. Similarly, in our boardroom, Sheldon Pollock, acting as our chair, is well experienced here in Canada and has great depth of knowledge of the capital markets and has been successful in many ways in his own right. The Kimmel family are very quietly one of Canada's billionaire families. Mike and Jeff are brothers. Their cousin Ryan, again, representing the third generation. Three of the most humble guys I've ever met, and again, very experienced in the hospitality space. Most recently, just having come out of a share ownership position, the Pittsburgh Penguins, but great purveyors of restaurants, both here in Canada and also reaching down to the United States and the Miami market. And I mentioned Bell. Again, a very significant investment in the earliest days of OverActive Media. Of course, Canada's biggest integrated media company. They bring us great scale and advantage, as we do to them in telling their story around their wonderful 5 technology and soon their next 5G generation mobile technology. And so what I've been trying to do for you today is to give you a sense of OverActive Media's leadership position in the industry. We think we've got the best real estate, so to speak. We're just in the process of building out our strategy around those asset holdings. We've got terrific people. We're in the one of the fastest growing industries in the world today, and we're delivering early results against our business thesis. So With that, I'm just up against 19, 20 minutes here. I have a couple of questions that have shown up in the question box, so I'll take those over the next few minutes. And so first, do we have an influencer or celebrity ownership relationships? Yes, I highlighted a few of those along the way. But as I mentioned, Sidney Crosby, Mitch Marner, Phil Kessel, Carl Hagelin, all of them investors in OverActive Media, and of course, great stars of the National Hockey League. The Weekend was a very early investor in OverActive Media in the fall of 2018 and remains a shareholder. There were two others on that slide that I didn't mention, but I wouldn't expect many would know. These are the two, Willie Rex and Vegeta are shareholders of OverActive Media, and two of the biggest Spanish-speaking YouTube influencers in the world, with a gross reach of over 100 million cross-platform. So again, a good number of those that I mentioned do bring all of that impact as you're asking about. The growth drivers and the milestones for 23. The business is driven largely by, again, the rev share model that springs from the leagues. We're getting progressively better and more guidance out of Riot around our League of Legends franchise. They have, from the very first days, met their minimum expectations of rev share for us. From all the way back to our first investment in 2018. Annually, they provided guidance and always beaten that guidance around the rev share. The other key driver, and again, high gross margin revenue opportunity, is just the growth of our partnerships. Again, from zero, we expect to deliver close to $8 million in sponsorships this year, many of them non-endemic. And so in all of those ways, that's a key metric for us as we head into 2023. And then we're looking for opportunities to grow, given our strong cash position. And in these markets, we see opportunities and consolidation happening in the industry today. So we've always got our eyes open for those types of opportunities that exist in these types of markets. How do we imagine the evolution of Web3 will impact the business? Anybody who tells you they know exactly what Web3 and the metaverse is, I think is probably fairly fibbing. It's an evolving space. We've taken a partner in Europe around our Mad Lions brand in Zilliqa. They are currently building their version of the metaverse, and they are seven-figure partners of ours because we represent an audience reach for them that will allow them then to populate and commercialize their reach to Web3 in all the ways that we're all starting to understand. Certainly, working with the biggest publishers in the world in that context will have huge advantage for us. Digital items are an increasing part of the business for companies like OverActive Media and for those of us that are invested in the industry. And so what better partner to have in the world than Riot or Activision Blizzard, who are leading with all of their IP against those significant game titles that we've invested in: Call of Duty, Overwatch, League of Legends. So yes, we do expect that it will grow to become a very significant part of our business over time. We have sufficient, there's a question about capital as it relates to the venue project. We believe we have sufficient capital to get the project started, yes, and again, support our operations for the predictable future. And so I might wrap up there unless I can figure out whether there are other questions, but I don't see any present. And so I will give all of you a little bit more time back. Again, it has been mentioned that we trade on the Venture Exchange up here in Canada and OTC in the US. Certainly any additional questions or information or up-to-date financials can be found on our website. And please don't hesitate to reach out to me directly if you have any further questions or would like to discuss anything more that I've highlighted for you today. I'd like to thank everybody for your time, and I'll give you just a few minutes back in your day. All the very best.